Now it's recording.
Welcome to the Daily Market Web, hosted by Victor Niederhoffer and Yelena Sennett.
Welcome. Thank you.
Some of you may know me. I've been trading every day for the last 60 years, and I've written a few books about it. Ms. Sennett is from Belarus, and she's an expert in information technology, has worked for Goldman Sachs, Nomura, and Deutsche Bank, and we met on Twitter.
Yes, pretty cool.
We both felt that the market, to appreciate it, you have to understand economics, business, psychology, ecology, gambling, statistics, and science. And we both felt that no other site, no other commentator takes that approach. And we thought that we could make a contribution in that area. One thing that we'll do is to recap the market each day. Unfortunately, to really recap the market, one could write a book about each.
And you did.
Each day's movements involve so many aspects, so many different relations, that to really encompass it, you'd have to be very sapient. Yelena, what's your thinking about the market these days?
Well, I think randomness plays a big role in the market movements, as well as human psychology as far as participation. It's basically a lot more trending than I think it's used to be, because market is accessible to a lot more people now than it used to be. And it's way easier to trade and to get onto the trends via Robinhood, Twitters, various chat rooms, etc. So there's a lot more trending and a lot more participation in that sense.
I wish it was that easy for me. I've never found in my 15,000 days of trading, I've never found an easy trade. And
no, I never said it's easy to make money. I said it's easy to trade. That's a difference.
Unfortunately, I'm not a person who believes in trends. In fact, I'm quite a contrarian. Today, the market started out, I have a little chart of the market.
She has to enable screen sharing.
Would you enable screen sharing, please, so that they can see my market chart? Yelena.
I'm not sure. Where is the market chart?
Security settings.
What?
There's like a security lock at the bottom of.
Yeah. Mm-hmm.
You should say like allow screen sharing. Is one of the options.
Well, in any case,
Yeah.
the market opened.
Got it.
Yes, like you said on your Twitter feed, the market opened 25 points down, almost, or about.
It scared the dickens out of everybody. And there was a lot of VIG that was created. A lot of people were forced out. There was news that the stimulus wasn't going to take place. There was news that China was going to take repercussions against us. There was news that there would not be any chance for the Supreme Court to make an adjustment on whether the election should be considered. Everything looked bad, and in the first minute, many people lost their fortunes. Many people were called for margin, and many people did the wrong thing. About 2 minutes later, the market was up, near the highs of the day. And then it went down to the lows again, about 3 o'clock. And finally, at 3:50, with 10 minutes to go, the market was almost at the highs. Then it went back to the lows. So you had about 6 different waves in the market. I wish it were possible to catch each one of them. Now, what do you think is the relevant?
Victor, let me ask you a question. Do you actually trade those waves, or
Yes,
do you?
I trade
So
all.
you're very active as a day trader, would you say?
Well, I don't believe in day trading. In fact, that's something I want to leave our listeners with. When you
But if you don't believe in day trading, how do you catch? Isn't catching those waves is by definition day trading? You're trading in and out, or?
Well, that's the key. It's not out. I think day trading is a lost gamble. It's something that no one should do. I always hold my positions overnight. There's too much friction in the market. There's too much spread between the bid and ask. And there are too many people who can gain an edge in the give and ask, in the bid and ask. So I don't like to trade with a horizon of less than a day.
So then for you, the definition of day trading is that a person who closes the positions at the end of the day, basically trades in and out throughout the day and goes home flat?
Yes, it's unfortunately the high frequency traders have been so successful in the past. Some of them have made money like 99% of all days for the last 20 years. They're so successful that they say to themselves, why should we take a position overnight? We'll just close everything out during the day. And when you compete against them, knowing that they make money every day and they take hundreds of millions out from the market, it's very hard to consider that you would possibly compete against them. Well, one way you can compete against them is by holding your position overnight when they're forced to get out. Now, there was several interesting things that happened in order to play the market. I take into account especially the Japanese and German markets. On daily spec, I post every day a chart showing the relation between bonds and stocks, which is very key. I'll tell a little story. Deems Taylor was the great expert, like Leonard Bernstein. He was the voice of the Texaco Opera for 20, 30 years. And he was very knowledgeable about opera and all sorts of music. He wrote some great books about music theory. And one day he was attending a concert of program music. And he wrote about how wonderful it was that they were able to duplicate the sounds of the birds, the sounds of thunder, the movement of children through the market, and the storm coming and approaching. He said it's amazing how the composer was able to catch each one of those notes, those ideas. But then he realized he was listening to the wrong piece, and he was writing about something that had no relationship to what he was writing. And he was thinking that the program music of the second and third piece was actually in the first piece. It complemented the composer. Well, I had the same experience recently. In my work, I take account of the interaction between about 15 different markets. And they get so embellished that, to save space, I call one of them natural gas. And I found in doing my work that the key to the market, the one key that if you knew what was happening to natural gas, you would know everything about what was going to happen. Everybody looks for that time, that market that will tell everything about what's going to happen. It could be the Nikkei at 9 p.m. Eastern time, or it could be the German DAX at 4 p.m. You know, you would think that there'd be one tell in the market. So I found that natural gas was the key, and I then thought of all the reasons that natural gas could affect the stock market and bonds, and how the energy markets and the politics regarding fracking were related to it, and how this could lead to the Democrats or the Republicans having the forefront. But then, unfortunately, after spending about a half hour in deriving all the relations and the reasons, I realized that natural gas for me was a ratio of two completely unrelated markets. So I was making the same mistake that Deems Taylor made. Well, there are a lot of mistakes that a person makes in the market. And in fact, what about you? How did you trade today?
Well, I think I'm more of a day trader, the stuff that you disapprove.
Yes.
So, but I do hold positions overnight as well. So I was actually short from last night. So I covered on the open.
That's very nice.
Huh?
You were short?
Yes, I was short S&P 500 futures from last night, and I covered on the open. And
that's very interesting. I was long overnight. So you certainly started out with an edge over me for 2 minutes.
Right.
Did you get out to the open?
And yes, I covered actually like 10 minutes before they open, because it's futures, you could trade anytime, right? So, and then I was building a short position in and out, basically, for a few points, 5 points, 5 S&P points, 10 S&P points. Today, the range was very narrow most of the day. So that's what basically I was doing.
Well, I wish I could.
Selling towards the highs of the day and covering on shallow pullbacks, basically. Because today was a range day. That was not.
Well, I think we'll be a good match because I noticed that you said the word short a few times,
Yes.
and I eschew shorting. One of the templates that I follow, that I was involved in, are the studies of Lorian Fisher and Dimson, Marsh, and Schaller, and Staunton. And they both made a complete enumeration of every stock price from, in the first case, 1926 to the present, and in the case of Dimson, from 1899 to the present. And they found that $1 invested in an index would have grown in 100 years and 120 years to $60,000. So I find that trying to beat a 60,000, in other words, $1 would grow to 60,000. So I find.
Right, but we don't live 120 years, at least not yet. I mean, I'm hoping for 100, but either way, I mean, we don't have 120-year time horizon. And we live in a world of immediate gratification and Twitter, where people want short responses and short stories, and nobody reads books anymore, unfortunately. So I think in that sense, people have changed. We're just not patient.
By the way, I noticed that you're an expert in certain aspects of science. What do you do for longevity? You said you expect to live to, or hope to live to 100. I'm over 100 already, so.
Well, I mean, I do have good genes. My grandparents lived till like 90 something years old. But in addition, I think that low carbohydrate diet, or ketosis, or borderline ketosis, basically low carb, high fat, medium protein diet is the best diet for longevity. But that's a long conversation, maybe for some other time, but that's the bottom line.
Well, we really take alternate approaches to the market in life. But getting back to your point about people having a shorter term horizon nowadays, 60,000 fold return over 100 years is 600% every year. So I can't beat a 600%. I can't go against a 600% return in a year. I'd rather be going with it. And I found that almost all my losing trades, which are legion, and what some people refer to me as the expert in wipeouts, although I've been wiped out, but I've also been very successful. I'm still here after 100 years. I find that shorting has led to all of my great losses, and it's something that I try to eschew. And since the market the S&P goes up about 60% of the days, and especially after a down day in NASDAQ, it goes up about 70% of the days. I certainly stayed away from the shorting overnight. In fact, I had a major long position going into the open, and I was horribly buffeted by the move at the open. I generally don't like to be short after the market the previous day has had a big down open. And the market had gone down on Tuesday,
Right.
excuse me, on Wednesday at the open. So I certainly didn't expect it to go down on. Now, how do you fathom, how do you formulate your trades during the day? Do you take account of duplicity? Do you take account of ecology? Do you take account of the way other markets are affecting the stocks?
Not as much other markets. I basically look at the price structure of the current markets that I trade. And for example, you mentioned NASDAQ, but if you look at the charts of NASDAQ for the last, I don't know, year or so, you could see that after each big down day, there was another big down day. It didn't happen today, but a few other previous down days, big down days in NASDAQ led to another down day. So it's
Lorena,
yeah.
One of the rules that I follow is I never make a statement unless it's been tested.
Right.
Now, you said that after a down day in NASDAQ, you're likely to have another down day. And I
only mentioned recently, not like for the last, you could see, half a year or so for sure.
Well, I'm going to test that while we're speaking.
Right, but you can see it's all subjective, right? Because the different, what's a large down day? How do you, is it a 1% down day? So it's.
What do you think the
I mean, okay, let me ask you a question though, because you're obviously more knowledgeable and experienced. For example, right now you could say all of the indices are quite extended, far away from moving averages. The call put ratios were very low. Did you look at any of that?
would you
The
test
sentiment is high.
relation between NASDAQ on consecutive days in the last year?
I am right now.
Okay, we're going to come up with an answer as to whether the NASDAQ
Sounds good.
2 down days in a row or whether it tends to reverse. I'm more interested. I like to trade very liquid markets, so I use the NASDAQ to predict the S&P.
Right.
Well, that was a very bad thing to do because the NASDAQ was up about 30% this year, and the S&P was up only 8%. Now,
Right. Well, but speaking to that point, does that bother you that there is this disconnect? Because it hasn't happened before that a few large companies is basically leading the stock market. So do you think the markets have changed in that regard? Like Tesla, Apple, Microsoft, and whatever, they're basically 10% of NASDAQ already.
by the way, we have just tested
Wow, that's very impressive.
relation between, in the last year, NASDAQ has been down open to close on 111 occasions. And the expectation for the S&P the next day is 7 points. And what about NASDAQ 2 days ago? Okay. By the way, what do you think affects the market in terms of politics these days? Who do you think that one of the things that I've been very concerned about is that there are so many ifs, so many possibilities that the election would have gone a different way if certain things hadn't happened. I like to say, if the big pharma company had announced that it had a vaccine on the Friday before the election instead of the Wednesday after. Okay, here comes the relation of the NASDAQ after it's down. Yeah, after the NASDAQ has been down from close to close on 93 occasions, and the next day on average is up 30 points. So
Right, but what if you run this test where NASDAQ is down 1% or more, for example? It's
no sooner have you asked that than we will answer your question.
right, but as far as politics that you mentioned,
Yeah.
It's mostly speculation, like you said, because you cannot backtest it. If you believe in everything is backtested, how do you backtest or test a relationship of politics to the markets?
Well, do you agree with me that the suppression of certain news?
Oh, yes, absolutely. I mean, the suppression of the vaccine news as well as the Hunter Biden investigation has certainly affected the election outcome.
Speaking about that, I thought a very important feature today was that they announced that Hunter Biden was
Right,
being investigated for taxes.
right.
Now, unfortunately, that news came from the Democratic Party. It didn't come from Fox News or Newsmax. The Democratic Party reported the news. Now, that has a very important effect on the market, because the reason that it was reported by the Democrats to me is that the progressives forced Biden to announce it, and they're watching him like a hawk. They're waiting to get their due, and
Right.
they felt that I felt that this I noticed that the odds on the next president, the most likely winner, is Kamala Harris. She's 5-1 against. Biden is 8-1 against, and Trump is 12-1 against.
By the next president, you mean the one that's going to be inaugurated in January, right?
No, I'm talking about 2024.
Oh, okay.
That's the odds. The betting odds are now favor Kamala Harris, and I think today's announcement was a step in her reelection. It made it much more likely that she'll be elected, because
Right. I think again, the difference is, again, your time horizon is so far into the future. We're talking about 4 years. Do you really think the market looks that far into the future?
yes,
I think the market, why don't you think the market thinks Kamala Harris is going to be president next year? I mean, between the Biden's health and the investigation, she could easily force him out next year. Why wouldn't she?
I think that's what happened today. Now remember, the market is a discounted method of taking account of all the future earnings related to and discounted by the interest rates. And the fact that Kamala Harris became more likely today, I think is one of the reasons the market went down. Now, one of the things that I've been very insistent about is that the market loves collectivism. Market seems to feel that the progressives have the be-all and end-all of what's going to happen. So
Why do you think is that? Is that because of inflation potential, or?
I think it's related to a book by Dostoevsky. Maybe you've read it. It's called The Gambler.
No, I haven't read The Gambler, but I read pretty much all of his other stuff.
By the way, why do you call yourself Anna Karenina?
I like the character. It's just appeals. The character is, I think, fascinating, very interesting to me.
In any case, The Gambler in Dostoevsky's novel had a fixation, and he couldn't stop gambling. He basically had a death wish, and he'd gamble at Monte Carlo. He'd lose all his money, and then he'd go back home and he'd cry and think about committing suicide. By the way, Mario Puzo had that same tendency. He couldn't stop gambling. He once said that I used to lose. He wrote the second part of The Godfather in Las Vegas, and he'd write upstairs, and he'd go down, he'd lose all his money, and then he'd go upstairs and write and try and make it back from.
So how does that relate to progressivism? And are you saying because they're going to be spending a lot of money in Congress?
No, I said it's related to the death wish. I think that
I see.
a lot of the very wealthy, the billionaires, I'd say about 90% of the billionaires are progressives, and they don't want anyone to replace them in the pecking order. They don't want anyone who's below them, who hasn't made money, to have an opportunity to make money. So by raising taxes, if the market were to raise taxes to 100%,
Right.
I think the market would go up, because the billionaires, the palindromes and the Bloombergs, they would be very happy if no one else could make money, if no one else could compete with them, and they'd have all of the luxury, all of the attractive women for themselves.
Right, but I mean, for them, taxes are kind of irrelevant. I think they already have all the tax structures and trusts set up in a way at various islands that they're not really that much affected by the taxation in US. But the market is also owned by lots of people who do have to pay capital gain taxes. Wouldn't that affect the market? If progressives raise capital gain tax, most of the people actually have to pay it. They're not billionaires.
Well, that can be tested, because every day there was a chart and a calculation of the odds of the Republican becoming the president versus the Democrat. And whenever the Democrat became more likely, the market went up. So the reason the market's gone up and broke the 3,700 level, which I think it will do again quite frequently, quite recently, has been because Biden is now 92% to become the next president. By the way, Yelena,
Yeah.
do you have anything that you think we should leave our listeners with? We've talked about many different things, and one thing we haven't talked about is the duplicity of the market, how it's very nefarious and always tricky. And certainly that happened today.
Right.
Do you want to leave us with leave our listeners with anything before we close today?
Well, just to add to the topic that you have mentioned about capital gains and presidents, I think what should be tested is not presidency, but the Senate control and the House, because it's a lot more dependent on who controls the Senate, because they're the ones passing the law than who is the president. So in that regard, I'm not sure if the market is discounting the right thing, because the Senate is what makes the laws.
What's your prediction on the Georgia election?
I don't know. I think it's going to depend a lot on how the Trump election goes. If Trump doesn't win, the odds are way higher that then Georgia is going to be lost as well, because lots of Republican voters are disenfranchised. They feel like the Republican Party is not supporting Trump in his bid to win the re-election, and so they're just not going to show up. Because why bother? If the election is stolen anyway, why do I bother voting, right?
Well, this is very good because we disagree on so many
Good.
different things. By the way, we both this is the first time we ever seen each other.
Right?
We met on Twitter, and one of the reasons that we're doing this is because both you and I know that if we were to say some of these things on Twitter, we'd be banned.
Exactly.
I'm very careful that I don't say anything that's non-woke on Twitter, although I'm not a big
Well, I think your misspelling confuses all of the Twitter checkers, because they can hardly understand you, I'm sure. It requires a human brain to decipher. So in that sense, you're safe.
Well, as I said, that's because I'm 100 years old. But by the way, what's your view as to the likelihood of the incumbent staying as the president in 5 days? Do you think he has a chance, according to
I think the chance is higher than the betting market is given. What do you say, 12%? Although it's for next year. I don't know, 20%, but it's really hard to predict that.
There are so many forces against him.
Right. I think it all comes down to whether the Supreme Court will have the balls, so to speak, to overturn the election. It's basically left to the Supreme Court. Will they have what it takes to do it? Is the power of public opinion going to be, it's all about public opinion eventually, right? Like gay marriage, it was not overturned, or rather authorized to be legal, until public has changed their mind. Same thing with the marijuana legalization. So if public would think that Trump is a legitimate president, by and large, maybe the Supreme Court could actually overturn the results. But I don't know, I'm not a lawyer, but I do think public opinion plays a big role in how Supreme Court decides.
Well,
The issues.
I go back to the fact that the president presides over a infrastructure, employees of whom about let's say there are 4 million employees, 97% of them are against him.
Right, absolutely.
And they're doing everything they can to
undermine him, of course, and to help him lose the election. But
I think that will interact and escalate to the Supreme Court. I think they would not have, as you say, the testiculi acles to go against what all the media are doing. It's so hard for the president to get a fair hearing, as we know. I read that 77% of the Democratic voters didn't know about the Hunter Biden situation.
I'm not sure I believe those statistics. I think it's irrelevant. I think 80% of the Democratic voters hate Trump so much they would vote for a goat. It doesn't really matter. It's a vote against Trump for 80% of them. So whether they knew about Biden or didn't, it didn't really matter to them. It's the margin that's affected. People who are undecided.
There were big changes in NASDAQ.
Big changes, yeah. Is it open to close? I'm looking for?
Okay, now let's just leave with one tested thing. We already said that when NASDAQ is down, it's very bullish the next day for the stock market. Now the next question is, and we know that when the NASDAQ is down, it tends to lead to a 30-point rise the next day. But now I'm going to test your final query, which is what happens when the NASDAQ is down big? What happens the next day? And the answer will be coming up for about.
She could also provide a date range if you wanted.
Yeah, for about 50 years, I've been developing market predictions based upon the interactions between every market in the day. And now we find out that when the NASDAQ was down 1% this year, which has happened 42 times, the next day it was up on average 0.5%. So be very careful about shorting the NASDAQ after a down day. And with
Well,
that,
like you said, it's in general dangerous to short the market because especially this year, it's been really relentless. And at least S&P 500 is more mean reverting than NASDAQ during the day, that is intraday. But NASDAQ is, yeah.
that's very interesting because during the US day, the market has tended to be much weaker than overnight. In any case, I think we've covered a lot of ground today, and
Yep.
I'll see you tomorrow.
Thank you.
Thank you very much.
It was a pleasure.
Likewise.
Bye-bye.
Okay.